Welcome to Business Talk, South Africa's premier business conversation platform, right here on businesstech.co.za, where we go beyond the headlines. I'm your host, as always, Michael Avery, and today we're exploring an industry that has traditionally, let's face it, been viewed as something of a grudge purchase, but is rapidly being reimagined as something that is actually a critical enabler of things like economic resilience, of inclusion, financial inclusion, and even entrepreneurship, which we know we so desperately need across the African continent. Insurance, I think if you haven't guessed by now, is what we're talking about. And it's certainly having a moment at the moment, and it's digital. So if your idea of insurance is still a dusty file in the back of a drawer somewhere, hopefully today's conversation might just rewrite that narrative for you. Joining me is a man who's certainly no stranger to leading transformation, Deon de Klerk, who's head of Africa Region's Insurance and Asset Management at Standard Bank. He's got more than 2 decades experience, from crunching numbers as a CA at PwC to leading strategic ventures at Liberty, and now driving the integration of insurance and asset management across Standard Bank's African footprint. Quite a job there. Deon, great to have you on Business Talk. Let's just jump right in. How does Standard Bank view the broader role of insurance in enabling economic development across the continent, given this project that you've been tasked with?
Yeah. Thanks, Michael. Good morning, and it's great to be with you. I'll get to that in a second. I just want to pick up on, the 2 decades. I've been very fortunate to spend time on both sides. I've been, half of my career roughly has been in Liberty, and the other half has been with a bank from an offshore perspective, and most of it specifically in Africa. So during that time, you build up a lot of knowledge around what clients really need, how they behave, what they're looking for, and what makes a difference and what matters to them. And I think that those insights have shaped tremendously the way we think about our digital insurance businesses and other businesses, and how that can help to spur this growth that you're talking about, because it is all about people and growing the communities that we operate in and assisting with that economic growth, because that's in the longer term where we go. Insurance got a key place to be in that sort of value chain. But I think apart from digital insurance per se, which I believe is just a ticket to the game, I think there's no other way really in Africa anymore. I think what we realized very early on is that in order to scale, you need to think and engage differently. So we've set out on building and incubating additional digital assets that would engage communities on their terms and in terms of what they value and what they want, and to start surfacing our solutions. And this is not only insurance solutions, a broad range of financial services solutions into these platforms where people would go to on a daily basis. Because let's face it, nobody's going to wake up in the morning and go and search for insurance on their phones to buy. They would engage in other means in their communities. So over time, and in more recent years, we've fixed on a number of themes and ecosystems. So we've focused on healthcare and education. Those are 2 of the main issues in Africa, and I think they're very closely related to financial services and financial inclusion. And we've started developing various platforms to engage communities in this regard. So I'll give you an example. We started in 2017 already to run what we call financial fitness academies, where we would sit people down and ask them to think about their lives. It's almost like a bulk financial planning session that we do with people. And we've built a whole digital journey around this. And it's been really well received, because we don't talk about products in there really. We ask people to really think about their circumstances. And by the way, everybody, it doesn't matter whether it's an entry-level client or a high-net-worth client, everybody has dreams and aspirations. Everybody wants to save for their dream goal or whatever it is. Themes of sending kids to school, to university, and that's why the education piece became really important. Healthcare is a theme that's common that comes out during these sessions. And we actually digitize that process as well. So as we sit here today, we've got a platform last year we covered about 125,000 people in this financial fitness academy process. And we've got a companion app where people sit and they sort of think through, and we give them time to reflect on what they need. And so you build up very rich data on a lot of people that you then, it's up to us, it's incumbent on us then to follow through, to start journeying with people during their lives, to put financial solutions in place in front of it, to help and assist them to achieve these dreams and aspirations. And of course, there's a wide range of things that you can then surface depending on who you're dealing with and what the problem statements are. So that's one of the things that we do. And digital insurance would be one of those things that you plug in there to satisfy a certain need. Because if you consider asking a question such as, well, think about where you're generating your revenue from, and what happens if you become disabled, or if you get retrenched, or there's another COVID episode, have you got protection in place? And these are the things that sort of then sit in people's minds, and they've got to think about how they prioritize that over savings, over their spending patterns. A lot of people are in debt, so how do they get out of debt? So it's a very satisfying process, actually, because at the end of the day, we believe we make impact because there's a desperate need for financial literacy in Africa. But we also have a commercial model, that backs it.
Yeah, no, and it
And
reminds
that's
me.
been our approach, Michael. So we've got about 4 of these platforms that we've developed that I think are really exciting. So it's early days. I mean, they've just been incubated, but we can start seeing the traction of how people engage with them.
And, if you dial back 30, 40 years and Donnie Gordon's vision, and I recall my father had a Liberty advisor knock on their door one day, and he didn't knock on the door and say, hey, I'd like to sell you insurance. He knocked on the door and said, Mr. Avery, I'd like to just sit down and talk to you. You've got your own business. Have you thought about what happens? And he was a motor mechanic. He worked a lot on the business and also on the cars in the business. But he said, have you thought about what happened if something happens to your hands? And just wanted to know a little bit more about him. And it wasn't about, and then once you understand, what are the dreams, aspirations, and potential risks to all of those for the individual, then you could start building something. And insurance is, as you say, only one part of that. But it's really interesting to hear you approach it from that perspective, because now you're saying, well, we've got digital, we can actually replace that single knock on the door with town halls where you're addressing, at scale, so many more people. And I think that's the exciting thing for Africa as an economy, because it helps you scale. And we so desperately need this kind of financial education across the continent. What's the exciting thing for SME development that you see as someone who's driving this conversation internally inside the group?
I think there's a similar sort of theme that emerges here in that, and I mean one of the other things that we also realize very quickly is that there's a large informal economy that sits there that grapples with these issues anyway. It's sort of sitting outside of the formal financial system. So the chamas or the stokvels are so prevalent in a country like Kenya, for example. There are millions of participants in these chamas, and these are little community savings groups that have a purpose. So some of them are traders, for example, and they would fund each other in terms of their stock levels and those sorts of things. Others would have a purpose for saving. So they would save out up to buy a property together. Others would be saving for rainy day funds like school fees. Others would save specifically for medical expenses. Others would save for funerals. So you can almost say that there's an informal insurance industry that's been created through these mechanisms, and there's an informal business layer that's been created through these informal groupings. And again, one of the that driving as an insight, we built a platform which is basically an administration platform for chamas, because that was the pain point. All these things are manual, and the treasurer would need to take cash and then work out who's contributed what and work out and it became quite complicated for them. So we built an admin platform whereby we invite Chamas to come onto the platform. It works like a WhatsApp group. You invite your members. It keeps the member records. It's got a wallet that sits underneath. We pay some interest on the cash that sits there. But then again, we start getting the data and we start seeing what else we can do to help these communities to grow. And it's been relatively successful so far. We've got about 5,000 chamas on our platform so far in Kenya, and it's early days. We haven't really started marketing it properly. So under the 5,000 chamas, we've probably got about 50,000 individuals that sit there. We're starting to see what people are doing, and again, it becomes part of this environment that you just described that says we can find a wider reach to access what's going on in people's heads. So as a financial organization, we can start to help them. So SME development is really important in our group. And I think our business and commercial banking units have a very strong focus on it. There are lots of sort of sector themed development programs for small businesses. And of course, we're trying to join the dots within the group with all the different value propositions that we can add in there. But you can't just, the days of the linear training that we had of product channel segment, and it's a sort of a singular sale that goes through those days. I think they work up to a point, but I think you really need to stand back and understand what people are trying to achieve and then strike a journey with them so that over a period of time you can help them. And that talks very highly to our purpose as a group, which is Africa's our home, we drive her growth, which you know. And each of our business units play a role in that larger purpose in making a difference on a day-to-day basis. Whereas it sounds easier than what it is. Well, it's not that easy, I must tell you, because there is a lot of, I think people don't necessarily trust all the financial services organizations. And that's why you've had these informal economies. So it takes time for us to build that trust with people. But I think that if we engage properly, and this is why our digital assets are so important to us, because you keep control over servicing processes, over quick turnarounds. You can help people. You use data. We're starting to use AI. So there are lots of ways that you can now start rebuilding this trust. Instead of taking 2 or 3 weeks to pay a claim, you can pay a claim within 10 minutes. And this is what starts making the difference. But slowly but surely we're getting there. Africa's not a one-day game, as you know. It's going to take a while.
Absolutely. But I mean, I think that trust gap is critical to understanding why there's an advice gap. And if we want to build that kind of financial inclusion that develops resilience, trust for me is going to be one of the biggest issues. And we still see it. I was chatting to Tim Marcelo of the Reserve Bank in the digital payment survey that they released towards the back end of last year. Even in South Africa, over 50% of individuals and merchants are still using cash. And you just wonder why, when we know all the data says digital is much more secure. It's becoming more frictionless. It costs so much less than cash, but it's because of that trust gap at the end of the day. What are the practical steps? Maybe we can just zoom in on that a little bit, that you take into rebuild or reinforce consumer trust in insurance offerings.
Yeah, I think starting with a cash and the trust and technology piece, I think that some of the insights that I think are well publicized and generally know, the mobile network operators, I think, have made a real difference in terms of engaging communities. And I think generally people in countries, so East Africa, where we focus heavily, generally people trust the mechanism on their phone. Okay, and that's why I think the emergence of financial services in those mobile network operator mechanisms has been fairly successful so far. I mean, the M-Pesa wallets and even the payment mechanisms in Uganda, those are trusted mechanisms, but they're still expensive for the bottom end consumer. The costs per transaction are really high for people that really don't have a lot of money. And that's why I think a lot of people still stick to cash in that regard. So there's a little bit of a barrier there. But I think as we build more and more digital solutions to embed into these digital ecosystems that I've been talking about, at the end, the consumer probably doesn't even realize which underlying providers they're dealing with. As long as this mechanism works and they can see that they're getting what they need and it's quick and there's line of sight and it's not just money disappearing into a black hole somewhere, I think that's a practical way of building this trust. And of course, depending on the theme that you pick, you could build digital engagement layers that are already trusted. Another example, we're working with a very prominent church in Uganda. So we've gone out and we've built a digital church engagement layer, which actually has nothing to do with financial services. It's actually the church and the congregation, the community that engage on this thing. And then we've surfaced the components of wellness. So your physical wellness, we've got a very nice digital health solution, which is full of AI, face scans and telemedicine based to give people access to primary care. But it's through the mechanism of the church, right? And then we've built financial wellness, which is this financial fitness academy that we surface into this community, so that it's through the trust mechanism, which is the church. And then, but I think our obligation is massive in this regard, because if we break the trust of people, we can destroy that whole ecosystem. So it's so important that we have the right solutions and we develop these solutions from a client perspective. And it's not our traditional solutions. You know, we need to sit and listen and see how people operate. A lot of people can't contribute to their funeral plan every single month. They can contribute when they can. So our digital solution has been built on that basis. So if you skip a premium, your policy doesn't lapse. It's got that feature, and our fintech MobiLife is an integral part of these platforms. And so we've had a lot of success in features like that, because we think about how people consume these solutions, and then we try and put our solutions into that zone so that we don't break the trust that is given to us through the other means that lie around in the market. And I think it's the same from the bank's perspective. Now, servicing the claims paying ability of our insurers, the capital adequacy of our banks. These are very, very important features, that the doing business the right way, not getting entangled in all sorts of funny business. We're very, very clear in terms of how we do business in Africa. And I think that almost differentiates us, and it does create trust in society. Our brands are really good and they're building, and that obviously helps a lot. And I always say that for a fintech like MobiLife, that is a very successful part of our business. The problem with insurtechs obviously is you can have the greatest ideas and technology and all of that, but it's always a scale issue. So by combining the insurtech with the technology that we deploy, so our digital insurance business is driven by technology such as Salesforce. It's a very, very strict sort of architecture that we develop, and we plug all of these processes into that, so that through any channel and embedded in any ecosystem, clients operate all the way through into our core policy admin system. They don't even know that they're dealing with MobiLife at the end of the day. It's the solution that gets presented to them on their terms with features that actually suit them. So, I mean, we could talk about this for a long time. I think the issue of building trust in financial services, it will take time, but I think if we continue doing the right thing, and I think as a prominent player on the continent, we've got a big responsibility in that regard, and we know that. So we can't mess it up. We have to make sure that we maintain that trust.
Yeah. And, listen, we have to be mindful and recognize that trust was also eroded. I mean, in the South African context, where you chat to individuals who may own 4 or 5 or 6 insurance policies, and you think, well, there's been an overselling of one particular product, and we could rather sell a bit more life insurance and build more resilience, but it taps into a particular cultural narrative and it's exploited to an extent. And I think that erodes trust. So it's really fantastic to hear such a large organization as Standard Bank taking this particular approach, because I think it's absolutely key. And also offers a huge opportunity, just, from the bottom line business perspective, in that consumers are a lot more savvy than we often give them credit for, I think. I want to come back to innovation, though. And, that MobiLife example is a fantastic example of how we're seeing fintechs and large organizations kind of marry a little bit. I know fintechs often complain they were invited to the dance, but they were always left on the sidelines by the big banks and some of the big insurers. And we're starting to see that change. Maybe you could just share a few more examples of these kind of ecosystem integrations or digital first solutions that you're launching just to help shift that dial in insurance adoption.
Yeah, sure. I think the MobiLife story has been defining for us. I think, as I said earlier, it's the core of our digital insurance platform, but it's not the only component of our digital insurance platform. You have to consider how you get your solutions out into the different, let's call them channels or communities or ecosystems where you want to operate. And tools like Salesforce are fantastic for that, because it's got out of the box. It's got a whole lot of functionality built in there with AI out the box and with rich data engagements, etc., 360 views of clients, etc. So it was very important for us from an architecture point of view to say, okay, it's MobiLife through a orchestration layer, because we build our digital insurance platform. The principle of it is that we build it once and we reuse it many times. So we've got our platform live in 9 countries now. We've got more than 2.2 million policies in our digital platform already. A lot of that is in South Africa. In Africa regions, we've got about 500,000 already, and it's growing. And the same rails that we use, we are able to innovate and put the next solution out and the next solution. You don't need to go and redeploy a system every time. We build it through this digital. And our vision here is to augment this platform with a lot of digital solutions. It doesn't have to be life insurance. We've also just launched a basic digital motor solution in Uganda. We've got our health solution, Unu, that I mentioned earlier, which needs to get into there. Our investments, unit trust, mutual funds is connected through there. And so we can start building this so that the mechanism for connecting into a digital ecosystem like financial fitness, for example, is exactly the same mechanism. The APIs are the same, the integration's already done, and you just feed more and more solutions in there to enrich the choice to clients and using data to put the appropriate things in front of users, rather than just saying, here's a big catalog of things that you can buy. I think it's very important that we start talking to what people need. If somebody takes the time and trouble to log in their financial fitness app, that their dream is, I don't know, to build a university fund for their kids, there's no point in sending all sorts of information around housing and equity investments and all sorts of things. You need to talk to what people actually want. And that, again, is not easy to do when you want to scale, because in the traditional world and upper end of the market, you would use financial advisors to do that planning. Now you've got to start covering millions of people, and you can't do that through call centers. You can't do that through financial advisors. You have to start doing it through technology. And this is where the MobiLifes of the world are so important, because the ability to move fast and to deploy new features, all already integrated into a larger digital insurance business, is what is required. I mean, you can imagine a financial services organization like ourselves. We've got a lot of legacy that has served us very well, and that's what pays the bills. Those are the businesses that are mature, that have been running for a long time. You can't ignore those businesses. You've got to keep building them. But at the same time, you have to start thinking about the express lane that sits next to it, and how you can get to the future and how you can expect. So it's still a tiny piece of our business, but I think the incubation efforts have started paying off, and therefore I think we can allocate a bit more resource to it and start growing some of these themes.
Fascinating. Because I know one of the big challenges always has been, when I was in Kenya last year, in Nairobi and Mombasa, just understanding how those markets work, what the pain point is for what is still a very different kind of economic structure to what we're used to in South Africa. Yes, we've got an informal economy in South Africa, but it's very, very prevalent in other parts of Africa. Break bulk consumption. What do informal merchants and vendors need? When do they need insurance in terms of their inventory and cash flow cycles in the month? And understanding that all comes back down to data. So these kinds of partnerships, I'm sure, enrich that data view so that you're having the right conversation with the consumer. It's very exciting. And I know your group CEO was also out batting for Africa, saying that we need to price risk differently as global credit ratings agencies, because Africa is moving. Africa isn't what we saw in the 80s and 90s. And, I think that's a conversation for another day, Deon. But what does the future of insurance in Africa look like from your vantage point? And how closely is this future tied to the continent's overall growth trajectory?
Yeah. I do think it's very exciting. I mean, even the initiatives that we've got running at the moment, and just seeing some of the traction that we're getting in some of these areas is very satisfying. I mean, we're making impact, and we're starting to make money in these things. So already it's quite satisfying. But when you consider insurance penetration being very, very low across the continent, and it's less than 1% in some of these large markets, the upside of when things really start getting traction is enormous. We've got populous countries in Africa and young emerging talent in these countries, and that's why, back to it's not a one-day game. We've got to be a bit patient, but we also have to be responsible, and so we have to put the right guardrails in place while still returning the correct money to our shareholders. So this can't be just a net investment that we make with a hope of optionality in the future. We have to generate our ROEs properly, and if we do that smartly, we can and build the scale out as these markets develop. So I think insurance has another wave to come as market penetration improves. I think doing the right thing in these markets will help that penetration. So financial literacy is one of the key things that will drive that. People to understand insurance better, the right solutions that talk to the needs of individuals. I think that's a key issue. Making it convenient to access these solutions and building trust by responding quickly, getting back to people, making it simple, transparent, easy to use. Those are all factors that I think will play a role in increasing penetration in Africa over time. So the group is properly entrenched in these markets, and it's going nowhere. So we part of these societies, and we have a role to play as a business unit to make sure that we get to the right opportunities. We are focusing on what matters at this stage, so that we can make sure in the large markets we get to a point where we're comfortable that we can grow with that market. There is so much to do and so many opportunities and things, so you can't be everything to everybody. And that's why the focus has to be there to scale some of these things, lots of proof points that we've got to get through, etc. And I still see it as building blocks at the moment. We've got fairly decent businesses already, but I think it all the real returns lie in the future. I think medium to long term is where we're really going to reap the benefits if we get this right.
And I mean, you touched on that youthful demographic. Is that a big opportunity immediately for you, given that I think it's probably the youth in Africa who may not be the biggest insurance consumers yet, but they're also the most mobile savvy and open to these digital channels. So, I mean, always on TikTok and different ways. Is this how you're thinking about, targeting a particular demographic that is the big demographic in Africa? We always talk about our youth and our demographic dividend as a key strategic strength compared to other regions in the world.
Yeah, I think there's a lot to be said for that. I mean, we know that the youthful demographic is it's untouchable compared to any other continent in the world, and we know that already there's a high level of digital adoption in these countries. So I think it's back to really understanding what people need and what they value, instead of coming with old traditional approaches to put a traditional financial advisor to sit with a youngster with stars in his eyes in Kenya, it's probably not going to yield the best return. But if you operate in his terms, where he operates, in the ecosystems that he operates, I think then you give yourself a better chance. But you've got to demonstrate value. I think that the youth, it's not so much about products anymore. I think people need to see the value of what they're doing. And that's why complementary financial solutions actually start building this value, because let's face it, when you're young and energetic like that, the last thing you want to do is think about heavy structured life insurance. You're probably more interested in investment opportunities and those sorts of things. But you have to capture these individuals into a ecosystem and understand what they need in order to grow that relationship with them. I must just also add that even in the more mature generations in these countries, the preferred way of operating is through mobile payment mechanisms. When I'm in, I don't know about you, when I'm in Kenya or Uganda, I use my wallet. I don't use my cards. I use my M-Pesa wallet, or in Uganda, I use MTN's wallet. And that's how you get around the country, and that's how you pay for things. It's just become, and you see senior executives in our organization using the wallets rather than the fancy credit cards and those sorts of. It's just how society works. But I do think you're right in that the future of these solutions lies in the youth and the youthful demographic, and listening to them and getting them in to co-create some of these thought processes. It's the ability to react quickly and to put features out that people value. I think that way of operating becomes a lot more relevant than the older approach that says, well, we think this will be good for the market, and therefore let's develop something, and it's going to take a year to roll this new product out, and then you go and market it, and you get advisors to try and sell it. When we've got to flip that around. It's easier said than done. There's a lot of traditional operators in that market, and you can't ignore that. You have to be part of that. But it's a choice whether you want to, alongside that, reinvent and try and leapfrog to the next generation.
Yeah, fascinating. Really, Deon, it's been a treat listening to your insights and the way you are approaching this as a group, because it's more than just insurance. You know, it's about rebuilding that trust relationship with financial services and leveraging tech to really do that, to help Africa realize its economic potential, which I think is, it's a BHAG if I've ever heard one, a big, hairy, audacious goal, but one that if you're successful with, I think could be absolutely transformational. So a big thank you, Deon de Klerk from Standard Bank, for your time and insights here on Business Talk. Good luck.